Good afternoon, Essentials Room, YouTube Live Room, and Chart Patterns Mastery Room. I'm in all three rooms. I like to have the continuity going in our Chart Patterns Mastery Room, but we usually have some bandwidth issues. So I'm hoping it works free. And if you're in Chart Patterns Mastery, if I put in a trade, I'll just say go into the alert section and see. But just to let you know and what we're watching in here, this is all about 3 reasons to do a trade. So I'm only on for 30 minutes, but I thought I'd go over on how we do it. So number one, the reasons can change every day. That's one thing that Warren Buffett said, and most successful traders is every day the conditions change and you have to adapt to them. Now, there are certain things that seem constant, but as long as you combine them with other things, it really helps your probability of success. So let's go into it and I'll show you what we're talking about. So in here is, so what I'm first seeing, give me 1 second. Great. So the one thing I'm seeing in here is what's happening now. So let's go into 3 reasons. The first thing we do is we always do our market preparation. So the first thing we're doing is we're going and we're looking at the broad market. So to try to formulate our theories. So the first thing we see in the broad market is the markets are right at resistance, right at that April 2nd liberation thing, and overbought. So that's our first thing. When you see that, then we're looking for the trigger to play downside. So your first reason, you're overbought in a downtrend. What's a downtrend? The 50-day moving average is going down. It's under the 50 and it's actually under the 200. And you're near that resistance. Now, that doesn't mean it go up to here first. That's why you need 3 reasons to do a trade. So I just can't stress that enough. So let me show you the reasons today and why we shorted the markets. Number 1, markets were overbought in a downtrend. You can take it with this. You could take it with TradingView. Go and take this on a daily chart. If you take only, forget about the 20, the 50 and the 200, you're in a downtrend, whether you want to believe it or not. So, but there are other indexes around the world that have really exploded higher. So you can't just blindly short it. Now, this is at resistance. You'll see it in here. You'll see it's at resistance and it's overbought. But you don't have the trigger yet. And that's why you need 3 reasons. So let me show you 2 more reasons. Like I said, every day the conditions change. So you just have to respect that every day. I'm telling you, I've been doing it a long time and the conditions can change on you. So let me give you some of the conditions. Number 1, ES overbought in a downtrend. What is your trigger intraday? Well, what made the markets go up for the last week? Well, the NVIDIAs of the world. So what's NVIDIA doing today? NVIDIA is getting pounded. So you have overbought in a downtrend and you have NVIDIA in a big old downtrend today. So you see that right there. NVIDIA in a downtrend. So the things that made you go up last week aren't going up. So you have NVIDIA acting weak on bad news. You have the overbought in a downtrend. You have the Google that had relatively good earnings, like breathe a sigh of relief, and the stock won't go up. All day it wouldn't go up. And they have a big buyback. So you have some of the Mag 7 refuse to go up. You have the ES overbought in a downtrend. But it might have been overbought in a downtrend right here. So what's your trigger? The trigger then is to go to a shorter term chart to see if anything backs up what you're saying. So let's go to it. So I'll show you. Now, a lot of times what I'll do is I'll go to the non-24-hour SPX. Just gives you a more defined. So you know, and I know that everybody on the internet said you're going to go fill this gap right here. You don't have to fill the gap. It's a resistance area. And it might. But the second it broke there, right here, you see that trend line? The more times you can connect a line, the more reliable. 1, 2, 3. There's your fourth. So you had overbought in a downtrend. You had the Mag 7 are acting bad, and you had a trend line break. Because heck, right here, all the banks look great. Maybe it's a big rotation and the market's going to go straight up, led by the banks. But the second that broke, that was it. That was it. So the key is overbought in a downtrend. Mag 7 stocks refused to rally. They were the things that made you go up last week. And you got a defined trend line break. Well, there's 4 reasons. So that's pretty cool. So you had 4 reasons on why to initiate a short today. So I just want to make that clear. You had 5 reasons. So in there of 4 or 5. So the whole idea is overbought. The SPX broke a trend line. So now you might say, well, are there any reasons to buy? Which is a good question because you've gone straight up. Well, you know, we talked about sentiment last week and the week before and the week before and the week before. I don't look at sentiment as a reason because just because somebody says they're bearish doesn't mean they're not long up the wazoo in their 401k. There's a big difference between bearish and short or bearish and long. And as you know, the CNN Fear and Greed, the AAII, all of those have been massively bearish for 6 weeks. So I don't use that as a reason. I just haven't seen it work. So how about on the long side now? Is there anything that looks good? Well, I'll show you. Number 1, overbought in a downtrend. Yeah, that's something that is concerning for bulls. But on an hourly chart, is something look halfway decent? Well, the first you're going to see is this trend line break here. Sure, that worked. But now you're near good support, at least intraday. Right in there. Let me take this and show you. There. So at least now you're near support, but that's another 20 points. So what would I be looking for if I wanted to buy? I don't want to buy right now. I don't have enough reasons. But if I did, what would I look for? Well, number 1, I'd look for at support, a reversal candle to the upside. I'd look for the things that were going down if they refuse to go any lower. So as that's going down, I'm looking at the NVIDIAs, the Apples, the Googles. If they're showing intraday relative strength relative to this, well, maybe that's a reason to buy. So that's one way to look at it. So, and the other, I know that you think, well, they're going to be tape bombs and all that, and the market's going to hold in this area. And I agree with you on that. It doesn't mean I can't find a short idea, which we did. But now, how do you find a long idea? I don't think we're at the area yet where I can just pedal to the metal, just buy stuff. Now, we have some longs and shorts on in the other room, and that's what we have on. But in here, I don't see the trade yet. Now, let me just make it clear, though. If this gets real oversold, it gets to massive support, and you get a reversal candle and a bull flag, well, heck, then I have 3 reasons. Oversold, at support, and a reversal candle. So then you have 3 reasons. So just want you to realize that. And I just can't tell you on how many times that we've watched every tick of a stock and said, oh, it's acting better, but we really don't have 3 reasons. So, you know, and they're less likely to work. Now, also, I do it one way. JC does it one way. Lorna does it one way. Maybe Brian Shannon with Alpha Trends does it another way. Everybody can have different reasons, But the main thing, and I'm not saying mine's better than anybody else's, but if you're initiating a trade or want to, I don't care who you listen to, you better have 3 reasons. If you have a hedge fund person or a significant other breathing down your neck asking why the hell you're doing a trade, you better have 3 reasons in some way. Some way. So whether it's doing it my way, whether it's doing it somebody else's way, try to have 3 reasons in some way. I mean, I just can't stress that enough. So, I mean, like I said, it could be pivot points. It could be Bollinger Bands. It can be all shapes and sizes of stuff. But just try to have 3 reasons when you get in a trade. So I just can't stress how important that is. So, I mean, that's what I've seen. So like now, let's take Tesla last week. So we're going to take Tesla last week. So number one, think you see a mile away the trend line. So now Tesla's had a habit of those type of trend lines work great. Now I'm not talking about today. I don't want to even go into today. But Tesla has a habit of when it has these defined trend lines, it has a good move up. So let's show you 3 reasons. What are your 3 reasons? One of them, everybody and their mother is short Tesla. Number 2, Musk says he's coming back to Tesla sooner than people expected. And number 3, it had that pattern. So you're trying to back up the, fundamental stuff with the pattern. So you see the pattern. So then you have the gap. Now it worked in Netflix as well. So you had the trend line break. You had a bull flag. And that bull flag, when that broke, it broke the bigger bull flag. And you had the fundamental data to back yourself up. So now you had 3 reasons. So that's one way to initiate. Would I have initiated right here? No. Would I have initiated right here? Yeah. That's where you hate when technical analysis say it's a better buy here than here. But at least you see the rationale. So you had the fund, you had it acted well after earnings, and you had the trend line. You had a bull flag within a bigger bull flag. So it worked. So that's why Tesla worked. How about Netflix? Well, sure looks the same to me. Yep, you had the trend line. You had the bull flags, and it had good earnings. And they're not affected by tariffs as much. So another one, you're combining fundamental analysis with a stock that looks like it's breaking up. So now you have your 3 reasons. So like I said, it doesn't matter if you listen to my reasons or somebody else's reasons, but you better have 3 reasons to be able to back yourself up if somebody asks. If you say, oh, I have a hunch, or I'm listening to internet and they say they like Netflix. No, try to develop your own 3 reasons. And like I said, 3 reasons can change according to who you're listening to. So, and like I said, for me, I'm not using pivot points. I'll use moving averages or ATR trailing stop, and then I'll show you something else. So let's go back to this. I'm going to go back to the SPX. It's overbought. And then you go to, let's say, a 2-minute chart. I use the ATR trailing stop a lot. So I'm going to take off everything but the ATR trailing stop and the MACD. All right. So you might say, well, it broke under that here. Well, that's true. But you couldn't develop a great trend line till there. But I'm telling you, if you only have one reason, and your one reason is mechanical, hey, it got under the ATR trailing stop. You know what? You're not going to lose a lot if you're wrong. If you should right there, and then you got stopped here, you still would have made money. If shorted there and got stopped, you still made money. If you shorted here, you wouldn't have gotten stopped till down here. So mechanically, even though it's only one reason really, as long as you see where the trend lines are and where the ATR trailing stop is, at least you won't lose quickly. So if you buy here because you're like, oh, I know there's going to be like some positive news from the Fed or from the administration, you don't have three reasons. So you're going to lose quicker. That's all it means. If you were trying the way down, there are times to buy on the way down if you start seeing a turn, like here. Is that good enough for me? Well, let's put it this way. If you buy right here, if you get stopped, you'll lose very, very little. That's the point. At least you have some kind of mechanism. So that's how we try to do it. So, and like I said, you could use pivot points. There are a lot of things. In fact, I'll show you one that I don't really use, but other people do. Like I said, I like determining if it's an uptrend or downtrend. I like to determine if it's overbought or oversold. And I like using a chart pattern, at least an ultra short-term one, to initiate an entry. But there are other ways to at least determine if it's near support. So one way is like Brian Shannon of Alpha Trends uses this. It's sort of subjective, but he's been taking a anchored VWAP from the all-time high and an anchored VWAP from the lows. So, and he's been taking other anchored VWAPs like from here and then from here. And like I said, it's an art, not a science. But when you go way back, so you go back to 2023, yeah, still to me, it's subjective. So I do know, though, that if you only take this one, when it gets up to resistance, I'll take everything off. All right. So here you go. You rallied to resistance, big resistance. Do you see that resistance? You rallied to resistance. You're in a downtrend, though. I like using the 50 moving average. So you're overbought. So now you've rallied to the resistance. I'm talking about this one right here. You've rallied to resistance. You're overbought. And other indexes are already going down. So that's always a big deal. So just, keep that in mind in there. Other indexes are already in a downtrend. So that's why in the morning we get on early and we go over correlated indexes. So when you take the S&P on the left and you see it's overbought, I'm talking about this one right here. There. And on the right, you have the Russell. The Russell getting pounded. So the Russell's in a big old downtrend. So this was under every moving average. This was over one of them. But like I said, if you want three reasons, well, you're overbought at resistance, correlated indexes are going down, but you still need that intraday trigger if you're going to do that, because you don't know if it's going up to here first. So let's go to that day, and I'll show you three reasons back then. This in here. So we're going to go back to the SPX or the ES, either, and we're going to go to right here. Right there. All right. So I'll give you three reasons. You're overbought. You're in a downtrend and you had an indecision candle. So that's a doji where the opening and the close are close to each other. See that doji right there? That's a doji. Let's put it back up here. Right there. That's a doji. Respect the break in either direction. So the next day when it went down, it followed through to the downside. Now you have three reasons. Overbought, in a downtrend, you had it broke the next day to the downside. There's three reasons for you. But if you don't want to do it like that, because you're like, it's a doji on March 25th. And like I said, I just mentioned about you could do it mechanical. Yeah, that's what I was just saying. So you can do it mechanical with the MACD. At least that way you're not going to lose a lot when you're wrong. So if you're just playing mechanical, it breaks the ATR trailing stop, at least you're shorting on the way down. So yeah, you could do it like an algorithm. There's some algorithms, that's all they're using. So no doubt. But when it's under it like here, you can't just short because it's under it because it was oversold. So you're overbought in a downtrend. And let's go to March 25th using the on-demand function of Thinkorswim. And, Roy, you're right about that. You can do it mechanical. And I'll show you an example of that, of how you can sort of do it. So let's go into, what was it, March 25th. There. So you see the doji. So you definitely see the doji, but you see, let's say on an hourly, it looks like that. Heck yeah, you don't know it's going down yet. So that's on the close. Well, it's pre-buffering. But you're right. At least if you're going to be mechanical, no, Roy, but I'll show you something, because you're right. It's really hard to detach yourself, from discretionary, no doubt. But if you have 3 reasons, at least you'll be more disciplined about getting in the trade. That's all I mean. But now you see where it was on that day. So it closed there. Now you might say, why was it a doji? Because it opened and closed about the same place. Now let's go to the next day. And you see what happened. Well, I'll show you, but I thought I showed that, but okay. But the key in here, I can show you exactly here. So you had the doji here, you were overbought, and then you had a rollover, and then you initiate when it broke the ATR trailing stop. Like here. So I broke the ATR trailing stop. So that's where you can initiate a trade. Now, if you don't want to do it on an hourly because you're a little nervous doing it on an hourly, go to a 5-minute. There, that was even easier. You had a defined trend line and you had a bear flag. But that's why I love Greg, that's why I love those bear flags. Because the tighter the pattern, the tighter the stop. Because one of the things, and I'm sure it wears on everybody, you get nervous about losing. I get nervous about losing. That's why a tight pattern means you can have a tighter stop if you're wrong, which means that you're more likely to initiate the trade. So here you go. Here's a perfect example for you. You see the doji on the left, the indecision candle. And it's overbought at resistance and an indecision candle. But you don't have your trigger. So you don't want to blindly short there because, heck, you don't know if it's going to break that doji to the upside. Then you see it start to roll over and you're still not sure. So what you do is you take this. You see that break? One of my favorite things is not shorting the break. It's shorting the consolidation. Because if you shorted right here, right there, that's a 3-point stop on a $5,000 product. Now, if you shorted right here, it's a 20-point stop because you're not sure yet. Does that help? So I'm hoping that helps on what about in here. So the key is they're going to miss a lot when you're disciplined. Now, that sounds corny, and I don't mean that as any kind of cop-out. I just mean you're going to miss things, which means it might do this and you miss this one because it doesn't look good enough. And then you might say, well, how about here? Wasn't that a bear flag? Sure was, but it never broke. So you're waiting for the break in the consolidation. And there's another thing, a kicker for you. This was not at the end of a doji. Remember, this was at the end of a doji. This right here was on the way up. So you didn't have the same kind of structure. So you got to understand that. So the conditions changed. That's why here was nice. And there were a lot of people that made money on that. But the key is we didn't short up here. We shorted here. So we gave up the first 20 points, but the direction was known. That's all I mean in there. Now, when you're talking about discretionary trading, Greg and Roy, and these are good questions, really good questions. When it does this right here, you could go and short an out of the money call credit spread. Because if it gets above that, you just take your loss. It's not going to go up fast. Unless, there's a tape bomb or something, which is very, very, it's scary about the risk on the upside, no doubt about it. That's why usually we'll play it with a spread to the downside. So if we're wrong, we're not going to lose a lot. Or this, you just take the SPY, which has a really tight spread. You go and short the SPY right there. If there's some, positive tape bomb, you'll stop yourself up here. So you're literally risking about 50 cents to make $5. That's an amazing thing. I don't know about you. I think that's pretty cool, the risk reward. So let's go to right now. Let's go to on demand right now. Does this show you anything? It was a lot more sloppy. But in answer to the question, go and look at a 1-minute chart of the SPY. So, and like I said, this was not as easy because sure, you see the trend line break, but you definitely had a lot of support in this area. So you might not have done anything. How about this one up here? Yeah, but that wasn't a tight enough pattern. So it wasn't that easy. So it's never easy, but I'm like, sometimes it looks clearer than other ways. But at least you saw that. So if you say overbought, but you might say, but it's over the ATR trailing stop. Well, that's another thing. On a daily chart, I don't use the ATR trailing stop as much. I use the 50. I use the 50 to determine if it's an uptrend or a downtrend. This on a daily, because a lot of times after a protracted downtrend, the first pop above the ATR trailing stop creates an overbought condition. You don't trust it. And that's exactly why you look for the trigger on the downside. Because heck, maybe it does go there. So that's why you have to find the trigger. Because a lot of us were like, hey, maybe it goes to there first. So just, keep that in mind. By the way, as we're talking, where are we on everything? Oh, we're fine. Okay. So, and I'll show you another thing, but we just mentioned Tesla. But like I said, all I'm showing you in here is trying to show you 3 reasons of doing something. And like I said, it could be Lorna's reasons. It could be JC's reasons. It can be my reason. Most of the time we look at things the same, but just try to have 3 reasons. So, I mean, that's the way I look at it. So thanks for being with me. Just a quick little half-hour tutorial for you. But now, where do you go? Thinkorswim is the ATR trailing stop. That's what we're using right here. There's your ATR trailing stop. Show you real quick. There, ATR trailing stop. It's over here in the studies. It's over here. And I use TradingView and Thinkorswim because I like backups. And I also like copying and pasting them for StockTwits, all my StockTwits subscribers. And they have really good foreign markets. So that's why. So take care. And no, Maria, it's not. No, never. Every question is great. So do you need a visual of that? Let me show you. Let me show you this. because it's all this stuff, it's easy if I've done it 8 million times, but there you go. So there it is there. Now, the question you didn't ask for is, how about on TradingView? Where's the ATR trailing stop? It's a little different. So, it's a little different. You can do average true range trailing stop. You can do volatility stop. They're all different ones. I just use this one. This is the person that invented it, Sylvian Vervoot. So take care. Thanks for being with me. Talk to you later.